Dan, let's start with Apple and a stock at all-time highs.
Look, I mean, it's really the services business has been what's the rock of Gibraltar here for Apple. I mean, I view that's worth 500 to 600 billion. And you start to view from a sum of the parts perspective, this is all the drum roll into an iPhone 12 product cycle, 5G going to later this year, next year. And there's massive pent-up demand, 350 million of 950 million iPhones worldwide are an upgrade opportunity. That's why I think a year from now, we're looking at a $2 trillion market cap for Apple.
Wow. So why was it 50% off a month ago or 2 months ago?
I mean, it speaks, and I know we've talked about it, with you and the team. I think the bark was a lot worse than the bite in terms of the services business. That was the worry. Was that going to see the type of softness in light of what we're seeing in the pandemic? And I think it comes down to iPhones, what you see in terms of, remember, in China, that's the demand and the supply side. They're caught in that crossfire. I think the worries were overdone, and now you have a drum roll into what I believe is probably the most massive product cycle from Apple in at least the last 5-6 years. That's why I think this is a stock that has a 4 in front of it. 425s are a bull case now.
Wow. So 375 remains the price target. The stock's at 330 today. Is this Apple specific, Dan, or are there, all the big cap tech names? I mean, when you mentioned a $2 trillion valuation, that's often thrown around with Amazon too. Having cleared the coronavirus hurdle, do they all just keep marching higher?
I do believe. I think FANG names go up another 20-25% this year. I think part of it, they've been safety blankets in this category 5 COVID storm. But I think part of it is that the stronger are getting stronger. And I think you're starting to now see on the other side of this dark valley, you're going to have the leverage and the growth that's going to, I think, push these stocks higher. That's why, in my opinion, we are still in the 4th, 5th inning of this tech rally playing out.
Real quickly on interest rates, I've often heard people say higher rates are a threat to the FANG names because they kind of trade inversely. What happens if we have rates punch through the 1% mark and keep climbing?
I think that could be maybe what I would view as a headline risk. But I do think, at least in the near term right now, it comes down to there's a lack of secular growth opportunities. That's why FANG names, and you look at cloud cybersecurity, those are stocks that I think continue to move higher. Just given right now we go into second half, and you look at Apple, that's the 5G play going in 2021.
All right, Dan, thanks very much. Dan Ives on Apple. Let's turn now to Boeing's roaring rebound with Kai von Rumohr. He's managing director and senior aerospace research analyst at Cowen. Kai, I mean, it obviously has been rallying in conjunction with airlines accelerating their reopening plans, American especially yesterday. Right. But how much more do we have to hear about reopening and passenger travel in order for Boeing to keep climbing?
I think we may have to hear a fair amount. I think it's up because, A, they did a huge debt offering, so the liquidity isn't an issue. And so, as you mentioned, the airlines are coming back. And I think some investors are anticipating a vaccine for COVID, which would take COVID off the table. But I think the problem is that, the airlines are basically suffering. This is a long-term capital goods business. The cycles are usually 4 to 5 years on the downside. And we're certainly in a downward trajectory now. One of the big issues is how many MAXs can they deliver next year? There's some chance of certification delay because of COVID. Also, the airlines are sort of pushing to defer a number of their deliveries. The dispute with China over flight restrictions is an issue because China is 20% of their backlog.
Wow.
And we've had a couple of airline bankruptcies.